Welcome back, everyone. So now we'll be looking at two types of analysis that we have: vertical analysis and the horizontal analysis. So we'll be taking alongside example using Excel and actually how to figure it out. So for vertical analysis, also called common sizing, basically this is just you expressing a line item in relation to the base amount. So the base amount for income statement is the revenue or the net sales, while for balance sheet is the total assets. Typical example that we have here, look at the horizontal analysis. We have the income statements of an organization. Then we want to look at the horizontal analysis, which is basically the trend analysis. So the trend analysis is calculated basically using current year minus prior year divided by the base year, which is this. So we're trying to look at the historical trend. Horizontal analysis is also called trend analysis. So we have the current year minus the base year divided by the base year. The base year is basically the prior period, which is the previous year. So looking at the example we have here, this is the current year, which is 2025, and the base year, which is 2024. Basically, all we need to do is equals to, we start our function or formula in Excel with equals to current year minus the base year divided by the base year, which is 2024. Then we have enter. So we can copy this down, Control D, then we change this to percentage sign, Control Shift 5. So change this to percentage sign. So this is how to go about a horizontal analysis. Or likewise, you can go through this route equals to the current year, which is 2025, divided by the prior year, which is the base year, 2024, minus 1. We have the same figure, the same amount as what we did earlier. This is how to make use of horizontal analysis for income statements. For balance sheets, we have the same thing. For balance sheets, I'm going to stick with the second one, equals to current year divided by the prior year, which is the base year, minus 1. Then enter. Just drag the formula down, Control D, Control Shift 5. Then we can do a little bit of cleaning. Just delete this, delete that. Lots of space in between our formulas, basically, when we copy our formula. So we have this. So basically, the analysis of this is that from 2024, let's use the income statement. From 2024 down to 2025, we witnessed a 31% increase in revenue from 129 million to 168 million. There was a 31% increase in revenue. Coming down to the profits before profits for the year, which is the net income, you can see there is actually an increase of 140%. Because last year we have a negative deduction, we have a negative net income, and this year it has turned to positive, a massive increase from negative of last year to positive for this year. That's how to analyze the horizontal analysis for income statements. Same thing applies to your balance sheet for horizontal analysis. You can see an increase from 11,000 down to 13,000, a 17% increase. That's for horizontal analysis. Looking at vertical analysis, which is common sizing, like I said earlier, we are looking at line item in relation to a base amount. The base amount for the income statement is the revenue or the net sales. So we'll go down to our Excel sheet back. So we have this year, 2024 and 2025. How do we do common sizing or vertical analysis? Basically, since the base item is revenue for this, and the formula for common size is basically the line item divided by the base amount. So for revenue, the line item is revenue itself, then divided by the base amount, which is still revenue. So because I'm going to be copying down this formula, so I'm going to make the revenue to be fixed, because throughout each line item, the base amount is the same thing, which is the revenue. So I'm just going to anchor down by pressing on F4 on my keyboard to bring out the dollar sign. Then I have enter. So this is not in percentage. So I'm just going to copy down, then change this to percentage. So we have percentage. So we'll do the same thing for 2025 equals to the line item divided by the base amount, which is revenue for income statements. So click on F4, then just copy down the formula. Option D, Ctrl Shift 5 to bring out the percentage same. So what this is saying, the analysis or the interpretation of this basically is saying 86% of our revenue is used to fund our cost of sales, and that's throughout each line item that we are going to be having through this. Then at the end of the day, just 70%, a negative 17% for 2024 year amounted from the revenue that was generated. Well, 5% of the amount generated amounted to our net income for the year. That's for common sizing for income statement. Coming down to the balance sheet, we are going to be for our balance sheet, the base amount is our total assets. So all items, which is the line item, is going to be expressed as a percentage of our base amount, which is the total assets. So our total asset, our common sizing formula basically is equals to the line item divided by the base amount, which is our total asset. Because the base amount is constant throughout the period, I'm going to be anchoring this down. I'm going to fix it using F4. That's your absolute referencing. F4. I'm going to have enter. Then copy this down by Ctrl D, Ctrl Shift percentage sign. Then I'm going to remove this. Likewise, remove this. So same thing for our liabilities and equity also. I will anchor it down on total assets by clicking on F4, which is the base amount. Ctrl D, Ctrl Shift 5 to change the percentage sign. A little bit of cleaning because of spaces in between. And we have our common sizing. We'll do the same thing for 2025. The base amount, the line item rather, divided by the base amount, F4. Copy this down. Ctrl D, Ctrl Shift 5, and a little bit of cleaning. A bit of cleaning here. A bit of cleaning. At the end of the day, we are going to be having our vertical analysis straightforward. So that's the difference between horizontal analysis and your vertical analysis. For your horizontal analysis, you're basically looking at the trend, the percentage change between two periods or between two or more periods, basically. For vertical analysis, you are looking at the same year, just the composition from the base amount or the base amount, which is revenue, for income statement and total assets for your balance sheet. That will be all. Thank you. We'll meet in the next video.